The last 10 years rewarded risk and innovation. AI stocks and crypto surged, big tech followed, and defensive assets struggled to keep pace. In this News and Numbers report, we break down the top performing stocks and assets of the past decade. Take a look. Shares of Indian tobacco companies slumped on Friday for the second consecutive session after the government imposed a new tax on cigarettes. Starting 1st February, the new excise tax on tobacco and pan masala kicks in. A government notification on Wednesday kicked off selling pressure on large tobacco manufacturers ITC and Godfrey Philips India. The market leader ITC shares fell more than 4% on Friday after crashing over 9.5% in the previous session to the lowest level since April 23. Godfrey Philips India fell over 2%. On Thursday, shares of the distributor of Marlboro in the country slumped over 14% to mark its steepest fall since November 2016. Meanwhile, India's finance ministry notified an excise duty of 2,050 to 8,500 rupees, or about $23 to $95 per 1,000 sticks. This tax will be dependent on the length of the cigarette. With the new tax, tobacco products are all set to become costlier from the 1st of February. While the government has not specified the impact of the duty change on retail prices, analysts say higher taxes are likely to prompt companies to raise the prices. According to analysts at the ICICI Securities, the duty would lead to a 22 to 28% increase in overall costs. The new levies will be over and above the current 40% GST rate. The excise duty will replace the compensation cess, which is currently being levied on such sin goods. In addition, a health and national security cess will be imposed on pan masala. Jefferies analysts called the move a clear negative for the tobacco industry. The analyst said it would hurt sales volumes and revive concerns about losing share to the illegal industry. The Tobacco Institute of India, meanwhile, in a media release, urged the government to reconsider the steep hike, citing hardship to over 4 crore farmers, small to medium enterprises, retailers and domestic value chains. The industry body also warned the move will significantly increase the illicit and smuggled cigarette trade. The industry group said that only about 10% of cigarettes sold in the country are legal, which contribute to over 80% of the tax revenue. The institute also highlighted that India's tax on tobacco products is among the highest globally.